Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Remember, it promises to be exciting 24 hours because there are a lot of stocks in news. There are central banks going to come out with decisions over the next 48 hours. And the currency in India is really volatile. So it promises to be a good, potent cocktail of trade. Let's start off with the headlines though. SBI is forced to look for an alternate plan for Jet Airways after talks with Etihad remain inconclusive. The Reserve Bank of India seeks a modification in the NCLAT order which barred banks from declaring IL&FS accounts as NPA. No relief for the Singh brothers after SEBI asks Fortis Healthcare to continue its efforts to recover the 403 crores from the former promoters. And some US officials voiced concerns on China turning back on some of the promises as the deadline on the trade talks near. Must say, if you look at the Bloomberg News report, some officials from the China side are also saying that they have not been given an assurance that if indeed there is a deal that is reached, then US officials will roll back some of the tariffs. So the Bloomberg News report yesterday essentially brought about that small downtick from the highs that we saw in the US market. So two news bits that came out from the Bloomberg News report. One was the one that just went out. The other one, let's just go to the previous plate first, and which is the concern of the US officials that China may be pushing back against demands. And then on the Chinese side, I think the fear seemed to be that there is no assurance of tariffs being lifted from the US side, and that was something that was apparently worrying Chinese negotiators. All of this was Bloomberg News, but as a result of this, when this came out, the US markets came off a little bit from where they were. So they ended flat, but this will not show what happened intraday. Intraday, the S&P 500 was well and truly in the green, only to end marginally in the red. Is it having its impact on the rest of the world? You could argue yes, but the rest of the world is very quiet. I think by and large, the world would be waiting for the Fed commentary to come out today before any other large trade moves can happen. It's probably showing its impact on the SGX Nifty as well, because that too is indicating a start which is marginally in the red, though I would call this a very flat start. The only good part about being an Indian bull trader right now is that yesterday was the first sign of IT and banks moving together. Yes, banks were doing very well, but they were not leading the rally yesterday, as this numbers show. The Nifty IT index was up about 1%, the Nifty Bank about 0.5%. And if both of these were to combine together and move, then that's a key pivot for the markets. While the options data still indicates a range of about 11,000 to 11,500, the fact that flows continue to come in strong with another 2,000 crores of FI money coming in yesterday's session, you would probably argue that the color of the green or the rub of the green is on the side of the bulls. However, I must say what happened yesterday was that it was not a usual day for the currency. You would expect that with the money coming in, the currency would continue to strengthen. But after a really strong strengthening phase, yesterday was a pullback. Some would argue even necessarily so. Maybe there was some intervention, whatever the case may have been. But there was 68.95 for the rupee in trade yesterday. And this is what I reckon brought out the rally in the IT stocks, because you saw all of them really spiking towards the close of trade. So this is of course the delivery volumes for the IT names, and focus on Infosys and HCL Tech because that was the rupee related movement, as a result of which the volumes were okay, but the delivery volumes were very high. And Mindtree, the volumes were naturally high because it was a stock in news yesterday. The delivery volumes not so much. But if you look at the intraday of what the Nifty IT did, it will show you how there's a very big spike towards the last half an hour of trade, wherein it took into account, I reckon, the strength in the currency and sharp uptakes in the last half an hour on all the 5 top Nifty IT names, as well as some of the others too. So watch out for this. The Nifty IT would certainly be in focus today, and that continues to participate. Then that's probably good news for the bulls. We'll get to know about it. However, while that hinges on some probabilities, there are specific stocks which most likely would react on the basis of news flow that we have around them. So firstly, Jet Airways, they've grounded additional 6 aircrafts. Again, the news bits remains the same. More importantly, sources tell, and we'll talk about this, I won't dwell too much on this, but sources tell that SBI is going to start looking for other potential buyers for Jet Airways as the meeting with the Etihad, the honchos remain inconclusive. So this is an important development as well for Jet Airways perspective, and we'll talk about that. Jubilant Life and the Employee Welfare Trust is to sell about 35 lakh shares, which amounts to about 2.2% of the equity at about 267 crores. But the floor price is set at 771 rupees, which is a discount to the current market price, nearly a 7.9 to 8% discount to the current market price. So do watch out for that one. Ultratech, and that stock remains firmly in focus today. Very positive commentary that has apparently come in. At least Citi seems to be saying that they maintain a buy with a target of 4450, but more importantly, they mentioned that the management expects EBITDA margins to revert to the highs of Q1 FY18. So positive commentary coming in. Let's wait and watch if Ultratech Cement tends to react positively today. CLSA has come out with a note on Jubilant Foodworks. They have maintained a buy with a target price of 1600. They believe that efficiency and cost savings will continue, and a strong 25% EPS CAGR over FY 2021. Frankly, trending earnings lead to trending stock price returns. Let's wait and watch if the market believes so for Jubilant Foodworks as well. Needless to say, watch out for Axis Bank too. A lot of brokerage notes have come out, so we'll monitor that too. I'll just end this piece with what's happened overnight, and this was one of the Bloomberg top stories. And now the world has 2 centibillionaires. So it's not just Jeff Bezos. Bill Gates again eclipsed the $100 billion mark, and now that exclusive club has 2 members simultaneously, Jeff Bezos and Bill Gates. So interesting. You like reading such stuff about people creating serious wealth, and now the world has 2 centibillionaires. Anyways, let's try and figure out what's lined up on First Word today. There's a collection of the top editorial stories that we want to bring to you. Firstly, Sajid Johnson to tell us why L&T's bid for Mindtree is more than just dil, pyaar and ego. But does L&T have what it will take to boost Mindtree's earnings? Agam Vakil joins in to compare L&T Infotech with Mindtree. Vishwanath Nair then joins in to talk about why Jet Airways lenders are racing against time. Then, as ONGC is expected to post record profits next year, the stock's not reflecting any of the optimism. Wonder why? Well, Somit will join in and tell us. And then Bank of America Merrill Lynch latest global fund managers survey, which throws up a worrying sign. Yatin, tell us, what is that sign? Start off with the biggest news flow over the last couple of days in corporate India, and that is L&T and Mindtree. Now, in opposing the hostile takeover, Mindtree's top brass posed 5 questions to Larsen & Toubro. Sajid Mangat and Agam Vakil are here to try and answer 2 of those crucial questions. Firstly, Mindtree's promoters asked if the bid is driven by a reckless pursuit of scale or ego, but it appears to be a strategy to put L&T's cash hoard to better use after the market regulator rejected Larsen & Toubro's buyback proposal. The company has decided to take the acquisition route. Sajid Mangat first starts off this piece. He's standing by, of course, to talk about L&T's cash utilization strategy. And Sajid, anybody who heard the whole press conference yesterday knew that you were at the top of your game in trying to question the management on that. But what do you have to tell us? What do you have to tell our viewers?
We've been looking at L&T for so many years now, and one of the key strategies of L&T for the last 3 years has been to increase this return on equity. Between 2003 and 2011, the average return on equity for L&T was 24%. Now that has fallen from 11 to 16 to almost 11-12%. And in 2016, when it embarked on the strategic plan for 5 years, the return on equity was 9%. The reason being that it invested so much heavily in capex, which is not yielding any returns. That is a cause of worry for the shareholders. And if you look at every report that comes out from a brokerage, the use of capital utilization and how capital has been stuck in some of the non-fungible capex is something which is prominent in all reports.
Sure.
To give an example, they spend so much of money in shipbuilding capacity, in the hope that they will get different orders. Those orders are not there, but the capacity is staying idle there, and that's not creating returns for the shareholders, because it's shareholder money which has been invested there. So they have embarked upon a way to ensure that the return on capital on equity doubles from 2016 to 2021, from 9 to 18%. They are currently at 15% odd in return on equity. And in that process, they have been trying to monetize all the non-core assets. Last 3 years, we have seen nearly 9,000 crores of monetization happening. Over the next 3 years, brokerage is expecting another 21,000 crores of monetization happening. So where is that money going to be used if the buyback will not be allowed under the current regulation? They will have to go and buy. From the capex, from engineering and capital goods or construction point of view, they don't have much capex there because they have already fungible plants and machineries which are there, which can be used. So the management was very clear that we don't have new capex cycle coming up. So there's no way we can increase the return on equity unless we go for an acquisition. And in this space, they think that services is the best way to go forward because they've been trying to increase their exposure to services through IT companies, 2 IT companies they have, and financial services. Mindtree fits in there because a services company will bring in much higher ROE and maybe EPS accretive. The track record of Mindtree, which Agam will be talking about as well, has been very good in terms of creating growth and return. Now you can argue that the margins are lower than L&T Infotech. That's separate argument. But point is that they have a higher ROE as compared to L&T. And when you bring in Mindtree into the fold, the overall ROE for the L&T is going to improve further. The assumptions that the management is taking is that at this current time, at the price at which they have acquired, 980 rupees, the return on equity is neutral to neutral. There is no decline or impact on return on equity. Going forward, if Mindtree continues the way it is, and that assumption is based on the management remains, the promoters remain, and they steer the ship at least for the next 3 years, there is a chance that the return on equity will improve and the margins will improve. Now, L&T has been always doing a board oversight for independent companies because many of the companies are listed, and so it's a board oversight, and they give targets saying, okay, you have to improve your margins or improve your return, and that's the way it works. So they expect that the return on equity is going to increase from there, and if that happens, the returns will double in 5 years. That's what Shankar Raman told us yesterday. So if that happens, it's all about how to use your cash. Dividends are going up every year, but dividends cannot be the only way because it's a tax inefficient way of giving returns to the shareholder. The other way is to increase return on equity, which will help in increasing the share price of the company. Completely. So it's all about how to bring in returns for the shareholders.
Yeah, and that should be the ideal strategy as well. But when I heard that, in my personal opinion, Sajid, when I heard the L&T management, they sounded a lot more convincing and convinced about their strategy. Somehow the response from Mindtree promoters left, to my mind, in my personal opinion, a bit to be desired. But without getting into the personal opinion, the question that we now pose to Agam as well, and you can weigh in on this, is now whether the acquisition makes sense from L&T from a balance sheet perspective is one thing, but does it have the experience, the wherewithal and the chops to take Mindtree to the next level, Agam? And what does history show us?
Well, in the words of the management, among the few questions that they had posed when it comes to L&T, the management of Mindtree had asked whether or not L&T has the chops to actually go ahead and take in and build a great technology company within themselves, and whether or not they can actually give shareholders those kind of returns. And I'm actually comparing LTI, that is L&T Infotech, with Mindtree, and the numbers are there. At least some of them are quite surprising in a positive way. So let's start with the growth at this point in time. In terms of CAGR, LTI's growth CAGR in revenues over the last 10 years has been 16.5%. Mindtree has been 22%. Sure, they have fallen just a little bit short of that of Mindtree, but they're still competent. It's still around 17%, and that, of course, has been around for a while. And let's not forget, in terms of the growth for the upcoming year, that is FY19, analysts are expecting 28 to 29% growth for both these on a year-on-year basis. Moving on to the next part, and this is perhaps a little more crucial and more important, is profitability. profitability. In terms of profitability, your CAGR for both these companies stands at anywhere between 18 to 18.5%, maybe 19%. But it's the margins where LTI actually takes over the cake in comparison to something like a Mindtree, because LTI's margins are much higher. Now, let's not forget that margins for both these companies have come off over the last 2 or 3 years because of a lot of pressures, including currency and also your talent cost increases. But while Mindtree's margins have fallen by as much as around 13-14%, LTI has managed to keep their margins around 17 to 18%. So that's another big positive. But the picture, of course, as far as your earnings are concerned, in terms of verticals, BFSI is the biggest vertical for LTI. On the other hand, Mindtree works on something like high tech as well as retail and CPG. Where LTI really takes the cake is the return ratios, that is the return that the company gives back to the shareholders. And this is where your numbers are very surprising. So if you actually take a look at your return on equity, for FY18, your return on equity stands at 32% against Mindtree's 21%. And for FY19, it is a very similar picture. So return on equity, in fact, if you take an average of the last 5 years, return on equity for LTI stands at around 40% against Mindtree's 25%. So this is where your numbers get a bit more stark. Let's come and take a look at your return on capital employed as well. Again, a very stark difference. LTI's numbers are much higher, in fact, nearly twice as those of Mindtree in FY18. And of course, FY19 estimates from Kotak, again at 35% for LTI against Mindtree's 22%. That leads us to the question, why is it that we've seen such stupendous returns for LTI since its listing? And what about Mindtree? So if we can actually pull the chart up and take a look at how LTI has done against Mindtree. There you have it. About 130% returns for LTI since it listed in 2016 against half those returns for Mindtree at 65%. It is essentially the return ratio. So when the management suggests that can they build a world-class technology company, well, it does seem so at this point in time that they already have done, and they can do a competent job with Mindtree too. Well,
Sajid, you know, it's interesting.
The numbers tell a story, right?
The numbers tell a story. I think that's what you are to focus on. You might believe that L&T, an infrastructure company, how will they house a technology company? But they've done one and reasonably successfully in its forward.
The only thing which stands out is that we have seen multiple senior management churn happening at L&T Infotech over the last 5 years, while there has been stability in Mindtree there because it's a startup promoter founder run thing. But that is now stabilizing. Over the last few years, we have seen stable ship happening there.
Yeah.
And that's if you look at the last 10 years thing, how L&T Infotech, it's been struggling because it tried acquiring Satyam. They couldn't, I mean, they almost did it, but they lost out to Mahindra there. And then afterwards, they were not able to get that growth back. 15-20% is the average growth they were growing. So the big leap for L&T Infotech hasn't happened as that is all organic, which is happening.
But to be fair, the big leap for Mindtree as well. The last piece, because we're really getting short of time, but to be fair, the last couple of years, I don't think there is a big leap for Mindtree has happened as well. Some other big companies
see the sectors where Mindtree is in. CPG, retail, all these sectors have been languishing.
Yeah, so be it. I'm not saying no, but all I'm saying that my only humble submission, looking at the numbers and looking at the stuff, is that these are the arguments. Can we say with certainty that L&T will not be able to grow or help Mindtree grow better?
That's not coming through.
That's not coming through. That's the limited
the arguments. These are the arguments which the management of Mindtree should be putting out instead of putting out 5 questions which are emotional.
Yes, that was, I think, the point of this particular piece here.
Anyways, both of you gentlemen, thank you so much for joining in today. I know we've done a lot on this, but it's arguably one of the biggest stories really in corporate India right now, at least in the mid-sized corporates. Thanks a lot for that. The next piece, and something really important as well, is Jet Airways. The lenders have decided to start working on an alternate resolution plan after the lead lender SBI and Etihad failed to reach an agreement. Two people with direct knowledge have told Bloomberg Quint that Etihad has reservations with the current resolution plan. Vishwanath Iyer joins us now with the details. Vishi, good morning firstly. The lenders seem to be running out of time.
Good morning, Neeraj. Yes, there is a time limit that strictly prevents bankers from taking any kind of action beyond the 180-day period that the Reserve Bank of India has specified in its February 2018 guidelines. This period started on the 1st of January when Jet Airways told the market that it had defaulted on its loans. That 180 period comes to an end at some point in June. Now, keeping in mind this sort of time frame, you also have to remember that the conversation that took place between the Etihad CEO, Tony Douglas, as well as SBI Chairman Rajesh Kumar on Monday, pretty much was inconclusive in a way that it indicates that SBI may need to think, a plan where Etihad is not part of the game at all. What we understand from our sources is that at this point in time, Etihad is absolutely not interested in putting in money if the current resolution plan is supposed to be invested. In fact, they're willing to sell the stake to the banks, and this is something that other news organizations have also reported, that they would like to sell the stake to the lenders
at 150, if I'm not wrong.
At 150. Now that number is of course up in the market, yeah. So we don't know yet. But the point is that they're willing to sell. Now, NIIF, what we understand from our sources is that NIIF was supposed to co-invest with Etihad into Jet Airways, trying to bring in that kind of equity, trying to stabilize the company. NIIF has a significant investment from Abu Dhabi Investment Authority. We're not sure, how that deal will go forward, whether NIIF will continue in the structure or not. Lastly, what you also need to remember is, let's say Etihad steps out. What next? Who else is going to bring in that equity? And that is something that the lenders have to figure out on their own, or probably depend on Naresh Goyal. Now, neither of those strategies have worked so far, so it is unlikely that they're going to get you some good results by the end of this 6-month period that the lenders have to resolve it. Short time frame, big task at hand, and pretty much lenders are now starting to think of this plan B, and ideally that should have been, one would have assumed that would have been from day one, that lenders had thought of another plan. Let's say this doesn't work out, what else can we do? There's a clear indication that the company should not go into the NCLT for insolvency proceedings. The expectation is that it will not garner as much interest amongst people. Aviation in India is a very significantly difficult business to get into and to maintain. Employees have not gotten salaries for many months. You have lessors continuously every day, grounding planes. That fleet is reducing. At some point, the operations of the company has to stabilize, or the fear amongst a lot of bankers is that this goes the Kingfisher route, which is something that they absolutely do not want. Another airline going down like that. So many things playing out at the same time, so and that short time frame. So we still need to see, how the lenders are going to deal with this this kind of development now. They met yesterday. The meeting went on till late in the evening, but they're not sure exactly, who this new investor is, or if there is a need for that, or if not that, then what else?
Sure.
All of these things are still under discussion right now.
I can tell you, flyers also don't want this going down the Kingfisher route for sure, Mishi. Thanks so much for putting that into perspective. It's a difficult task, to kind of analyze what's happening in Jet Airways almost consistently, because so much of news flow, some unconfirmed, some confirmed, and going through multiple sides. So difficult one, but thanks so much, Vishy, for putting that into perspective. ONGC is the third stock on our radar today, expected to report record profits in the current financial year, but valuations have fallen to a 14-year low. So why is the stock out of favor with earnings looking so good? Out of sync with earnings, isn't it, Somit?
Well, yes, actually the stock has been out of favor. It has been an underperformer for the last 1 year. Now, this is despite the fact that their FY19 profits are expected to be the highest ever since listing. Now, if you see the Bloomberg poll of 10 analysts, expect ONGC's net profit for the financial year 2019 to be close to around 27,400 crore rupees, which will not only be 37% higher compared to last year, but also the highest ever. Now, despite this, the valuations of ONGC are at least at a 14-year low. Now, the 12-month forward valuation, based on all the three important parameters, that is price to earnings, price to book, and enterprise value to EBITDA, is the lowest at least since 2006. Now, in the last 1 year also, if you see, it has been an underperformer. It has underperformed their benchmark, that is the Nifty 50, by over 20%. So what is it that has been the consistent overhang on the ONGC stock? Firstly, the fear of any populist measure taken up by the government of India ahead of the elections could lead to a possible subsidy burden on ONGC. Now, this is because the FY19 petroleum subsidy was kept low at around 24,800 crore rupees. Secondly is a stake sale done by the government to meet its divestment target through exchange traded funds. Now if you see, so far in FY19, the government of India has conducted 4 stake sales through ETFs, that is 2 were CPSE ETFs and 2 were Bharat 22 ETFs. So in all these 4 ETFs, the government had sold the stake in ONGC at a discount, and ONGC had the highest weightage in these ETFs. So this has been an overhang on the stock and has limited the returns for the stock. But despite this underperformance, the analysts have continued to remain bullish. Now, what are the reasons why analysts are bullish? So firstly, it is the record profit growth and the cheap valuations, as earlier pointed out. The second is analysts don't believe that the company will have to bear any subsidy burden. Now that is because kerosene and LPG prices have been hiked, thereby negating some of the possibilities of a subsidy burden. Secondly, if you see, there's a possibility that the government might roll over the subsidy burden to next financial year to meet its fiscal deficit target for FY19. So that is another thing, and this could be possible because for FY20, if you see, the petroleum subsidy has been kept at around 37,500 crore rupees, despite stable crude prices that have been expected for financial year 2020. And thirdly, if you see, ONGC has been consistently telling analysts and investors that they don't believe that the government will ask them to bear subsidy. So that's the reason analysts are not expecting the company to bear any subsidy burden. Third reason is the production growth. Now if you see, over the years, the gas production has been continuously increasing for ONGC, and that is also expected to continue in financial year 2020. Now management is expecting a 4% growth in the gas production business. Now if you see on the crude production, now that has been falling for ONGC in the last few years, but for financial year 2020, at least the management is expecting that the crude production would also increase for ONGC in FY20. Now the fourth reason is, with this growth in production, the prices are also expected to remain strong both for crude and the gas. Now if you see, Brent crude is expected to remain in the range of around $66 to $67 per barrel in FY20. Now this is according to Bloomberg estimates, while gas prices are expected to increase by nearly 11% to close to $3.74 per MMBTU. Now that is according to a Bloomberg Quint poll. So obviously higher prices will definitely benefit the company's financials in financial year 2020. Lastly, a high dividend yield. Now if you see, over the last 9 years, ONGC has continuously been distributing nearly 40% of its average net profit as dividends. Now analysts are expecting this trend to continue for ONGC. Now so far in FY19, the company has announced one interim dividend, and they will be meeting on March 23rd to consider the second interim dividend. So both these interim dividends and the analysts are also expecting another dividend to come in FY19. So on the back of this strong dividend yield, also analysts are bullish on ONGC.
But out of sync with earnings, nevertheless, is ONGC. So, Amit, thanks so much for putting that into perspective. As we end first word, it's important to take stock of what global investors would be doing, and they are not holding on to cash right now, but that doesn't mean it's necessarily flowing into equities all through. The Bank of America Merrill Lynch Global Fund Managers Survey shows that allocation to equities fell to 30-month lows in March. Yatin Mota comes in to take through that details. Surprising, Yatin, because if the EM flows are to be believed, that allocation is moving up.
Yeah, that allocation is moving up, and probably, that is the passive money which is flowing into emerging markets, especially the likes of India. If you were to believe the Bank of America Merrill Lynch, fund manager survey that they do, they published it yesterday evening, which says that the cash levels have dropped to 4.6% from the earlier 4.8%. And more importantly, despite the cash levels dropping, the pain in the equity side is still there. In fact, they say that the equity allocations fell to the lowest level since September 16. So when it comes to the allocation, the cash is not moving out. The fund managers are holding on to the cash levels, and probably that is not helping, the equity markets. In fact, if you look at the top picks at this time and what are investors doing, investors are, long defensives and rate sensitives and short cyclicals. And probably that comes into picture when we see a lot of volatility in these, metal names and cyclical names. Of course, when the survey was carried out, interest rate is something that everybody had, queries on and questions on. So 53% of the fund managers, they believe that the short-term rates for the US Federal Reserve will remain unchanged and lower over the next 12 months. So that is the, expectation of global fund managers that probably from here on, Fed will start, loosening rates. Also, global growth and profit expectations have rebounded for second month in a row. Strong economic activity across emerging markets and large markets like US, China, and India is expected. Of course, we have seen some slowdown in the recent times, but they expect some bounce back moving forward. As far as the outlook is concerned,
what are the crowded trades according to the fund managers in the survey? Is short European equities. There is a lot of uncertainty in Europe. There are issues regarding Brexit. Car sales have slowed down. A lot of other economic issues for Europe, but they do believe that short European equities is now probably one of the most crowded trade. Of course, long US dollars and long FANG stocks, which is basically Facebook, Amazon, and the likes. These are the probable crowded trade again, but these come after European equity short call. And biggest risks, this is something we need to talk about because China's slowdown is the biggest concern point for emerging market fund managers and global fund managers at this point in time. It's not related to trade war, but a China slowdown is something important, that they are pointing out. So do not mix China's slowdown with the trade war. Trade war, of course, is a concern, but corporate debt concern, especially for the European markets, and geopolitical risks are something which fund managers believe could pose as a threat in the short term to the medium term for equity markets globally.
Okay, Aditya, thanks for putting that into perspective. That's all that we have on First Word today. A quick programming note. We discuss markets and macros with Mukul, Kochhar of Investec. Talk about all the moving properties. He joins in at 9 a.m. To talk about all the key stocks. Special conversation, though, with former SBI chairperson Arundhati Bhattacharya on the state of PSU banks and what the outlook looks like. After this break, though, full tilt towards the day's trade.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're watching IndianOpen right here on Bloomberg Quint Live. Good morning, Neeraj.
Morning, Devina. Interesting day of trade simply because if we have the Nifty IT participating as well, the signs of which were palpable yesterday, then the scene could be very different.
Yeah, and Infosys in particular, that's the one that's the big heavyweight that not just uplifted the IT index, but it was a big contributor on the Nifty 50 as well. In fact, after Reliance, Infosys was the second top performer in terms of point contribution to the Nifty in yesterday's session. But aside from that, banks will continue to remain in focus. We're going to see whether or not yet another day where we see big moves on the bank Nifty and also a new life high. But let's talk about what happened in the futures and options space. Agam Vakil joins in for that. Agam, good morning.
Good morning, Devina. Well, we saw the 7 straight days of gains for the Nifty yesterday, and we did see more accumulation in the indices too. with the open interest rising by as much as 6% for the Nifty 50. Futures and the Bank Nifty futures also saw accumulation towards fresh longs, where open interest increased by around 3.5%. The India Volatility Index came off by 2.5% at around 16.5. Well, I would say relatively comfortable levels for those who are long in the markets. How about option premiums and options? Well, at this point, we did see a little more writing around the 11,500 mark, considering we saw the Nifty move above that mark. The real question is if we can hold, considering your max OI in calls still stands around 11,500. Can this change? That's a question we can answer perhaps towards the end of today. Do remember that it is the options expiry today, considering tomorrow is a holiday, so it has been brought forward. The Nifty put call ratio edging higher to around 1.77. And in terms of those stocks which are in the F&O band, we have Adani Enterprises, BEML, IDBI Bank, along with Just Dial and Jet Airways. Also, two companies from the ADAG pack, Reliance Power and Reliance Capital. Moving on to stocks which were very active, we did have Mindtree. A lot of traction seen there. In fact, some shorts building up, considering an open interest build up around 37%. Moving on to the next one, Just Dial is in the other crucial one, which has actually seen considerable unwinding coming through. So keep an eye on this one as well. And CG Power, interestingly, looking at fresh longs coming through. So we'll be watching out for this one as well as we move to trade today. On the whole, we're expecting mixed cues, at least in the beginning of the session.
All right, Agam, thanks very much for that. And going by what SGX is doing, start could be fairly muted. In fact, today's day, even if it was a day of consolidation, wouldn't be bad for the markets, which have been up and roaring over the last 6 to 7 trading sessions. But let's bring in Abhimanyu Sofat. He is the Vice President for Research at IIFL. He's joining us on the show right now. Abhimanyu, thanks very much for taking out the time, and good morning to you. You know, what's the chatter on your desk, in the trading desk, in the trading room, with regards to being a little bit more cautious and wary of this swift move that we've been seeing on the indices, or go with the flow?
So I think so, you know, it depends on which particular sector what we are talking about. Say, for example, on the BFSI space, clearly there's a lot of momentum which is happening. If you check on the sectoral side, this year the earning growth for the sector is expected for the index at close to around 52%. Now, obviously, largely this is because of, you know, reduction in slippages and, you know, better risk assessment by banks, and, you know, that leading to better profitability in addition to the normal growth that we see. Plus, we also see that, you know, part of the market share which was being taken by NBFCs, that might slow down, and that may come to the private sector banks. So considering that, I think so the momentum on the banking side might continue going forward as well. With regard to mid caps, I think so it's more of a stock specific kind of a thing. The flows have been there, coming more from the, you know, the usual HNI guys right now. I think so most of the domestic funds per se have not participated till now. But I think so over a period of time that might change, because, you know, as we see a lot of the ETF money coming on the large cap side, ultimately the sellers are the Indian mutual funds and other institutions. So once that money comes to them, they need to deploy that particular money, and that is likely to come more on the mid cap side because they are selling the large caps. So I think so it's a matter of time. But valuation obviously on the mid cap side are not very cheap all across. So it's going to be a stock specific kind of a market again, you know, on the mid cap side, especially after the results, because every company may not do well going forward in the current scenario, when oil price also has slightly gone up now over last couple of days.
Abhimanyu, what's your sense on what happens to private banks? Now, yesterday I believe Axis Bank had some analyst meet wherein they have sounded off fairly positive commentary as well. What's the house view on that one? And in that space of 4 or 5 names, which are the ones that stand out the most?
So I think so Axis is something we have been bullish for last 6 months especially, and it continues to be among our top picks, you know. So 3 stocks clearly that one needs to look at is ICICI, SBI and Axis Bank. These are 3 ones because considering their size, I think so the risk reward is quite favorable. Valuations are not as expensive as other stocks. Especially in case of Axis Bank, I believe that this transition of management which has happened, that is going to bring significant changes in terms of how they're going to perform. So clearly, in terms of risk management, I think so that's a very important area where we are seeing a significant change in terms of how they are managing, their loan book, and that is likely to significantly ensure that there is more stability in terms of earnings. So I think so overall, what the management has said in the analyst day yesterday about targeting 18% kind of an ROE, that seems really possible. And once they are able to deliver that consistently over a period of time, I see no reason why the stock doesn't get a consistent multiple of at least 3x price to book. So I think so things look quite decent for it. In case of ICICI Bank, it is more a SOTP kind of a play. And in case of SBI, considering it is still trading at 1.1 price to book, and when now some of the assets are finding some amount of resolutions, I think so it is quite possible that SBI also now performs going forward and participates in the rally going forward.
All right. Abhimanyu, stay on with us. Lots more to discuss, but it's time now to move on to our research team. They're joining us right now to talk a little bit more about some stocks in news that could see a reaction in early morning trade. What's keeping Citi bullish on Ultratech, and what came out of the analyst meet for Axis Bank? Mishka, let's start off with you first on some stocks in news.
Yeah, so the first stock we're talking about is Bodal Chemicals. They completed expansion of their dye stuff plant by 6,000 million tons per annum, and after this expansion, the total capacity of dye stuff plants of the company stands at 35,000 million tons per annum, excluding the liquid dye stuff. The company also completed facility for production of thionoyl chloride plant for 36,000 million tons per annum. Maruti Suzuki to raise prices for Eco model in a price range of rupees 400 to 23,000 across variants because they've added additional features to this product. Rallis India receives a letter from Pollution Control Board to suspend its operations at one of the units in Gujarat caused by a flash fire during transfer operations. The annual shutdown of the unit is also being advanced from April 1st to mitigate any financial impact. Fortis Healthcare's board approves appointment of Dr. Ashutosh Raghuvanshi as MD and CEO with effect immediately for a period of 3 years. Then we have Aarti Drugs. The board of directors approves a share buyback of 2.8 lakh shares, which is about 1.2% at rupees 900 per share, which is aggregating to about 25.38 crore rupees. March 29th has been set as the record date. DLF's arm announces second joint venture with Heinz for developing high-end commercial project in Gurugram. The arm will hold 67% while Heinz will hold the remaining stake. The investment by the JV partners will be around 1,900 crore rupees over 11.76 acres of land owned by the JV company. And lastly, we have Jubilant Life. Jubilant Employee Welfare Trust to sell 35 lakh shares, which is 2.2% for 267 crore rupees. The floor price is set at 777 per share, which is at a discount of 7.9%.
All right, Mishika, thanks a lot for that. Those are some stocks you need to watch out for. Axis Bank, Yatan in focus. They had their analyst meet. What did they come up with?
So, Devina, the shares are at record highs, near record highs, and yesterday also we had some bout of positivity in the stock. They had an analyst meet yesterday post the market hours in which the management had indicated that 18% return on equity is what they're targeting on a sustainable basis moving ahead. Also, when it comes to the capital raising, remember they recently raised some funds. So the management was of the view that for the next 12 months, there will be no fund requirement. As far as Axis Bank is concerned, they feel that they are well capitalized at this point in time. Also, when it comes to the network expansion, they say that the aim is to scale up the subsidiaries. Of course, insurance is one bit that they will focus moving forward according to the management. And also, when it comes to the retail mix, there also they are expecting some bit of ramp up to happen on the CASA front. Also, when it comes to the corporate loan book, retail has been good, but on the corporate side, the fee growth is stable, and of course, they are cautious on growing the guarantee business. So, these are the broad points which Axis Bank spoke about. The management was fully confident about return ratios being on the better side moving forward, and also on the asset quality, they seem to be confident that things are under control.
Right. Yeah. Then thanks very much for that. UltraTech Cement, Citi seems to be maintaining its bullish stance.
Yeah, they hosted senior management in UK, Europe, and there are two contrasting commentaries coming in from UltraTech and ACC Ambuja. What UltraTech typically has painted is a bullish scenario out there. I'm going to read out that for you. Cement industry is in sweet spot with improving demand, muted supply, rising prices and falling costs. Now, this remains to be seen that ACC and Ambuja said that the industry right now, the demand remains muted at 7 to 8%, and the costs are actually rising. So there are two completely contrasting situations here. UltraTech management expects EBITDA margin to revert to the highs of Q1 FY18, which is a growth of around 23 to 24%. And it goes on to say that with the continuity of the current government, the demand is expected to grow at 10%. From an average of around 8.5–9% that you've seen in the previous year. It also says that the change in the government, however, with that, the demand will come down to 7 to 8%. A muted outlook only if there is a change in the government out there. Industry supply is expected to grow at 3 to 4%, which is at a slower pace as compared to what the demand is. The utilization right now is at 74%, and a pocket of strength right now is expected to be east, center, and north. Something similar what even ACC suggested. They expected the growth to come in from eastern region, a commonality there, but then cost pressures, they're pretty much divided out there. They say that the petcoke prices soften from Q4. That is why they see the cost pressures ebbing here on. ACC Ambuja, however, have said that they expect the cost pressures actually to escalate from the previous levels. And the focus point for UltraTech will be the profitable market share, deleveraging, efficiency gains, and use of alternative fuels. They've also maintained that they have actually gone ahead and taken a price hike in Feb and March levels.
All right, guys, thanks a lot for that. So many more stocks to keep an eye out on. In Abhimanyu, I just want to come to you for the cement pocket right now. Obviously, we saw the trend starting off with southern-based cement manufacturers increasing prices, but then again, there were some talks of a rollback kicking in. But just the fact that the chatter is that the branded players are at an edge over the unorganized players. How would you read into the stocks which are listed now and the kind of potential that these cement makers have in terms of shareholder returns?
So overall for the sector, we have a negative view for the most of the companies except for one or two companies like Heidelberg Cement. We feel that going forward there is going to be a substantial pressure of margins for the industry. Whatever uptick we've seen in terms of pricing, we feel that going forward it's going to evaporate, because going forward the volume is going to be a challenge considering the lack of water being available in states like Tamil Nadu and in Maharashtra. I think so during this summer you're going to see a fall in terms of the growth that one is expecting in cement volumes from these key states. And from that perspective, we feel that the street is being over optimistic about cement as a sector. So as such, we have a negative view on the sector.
Okay. Do watch out for that one. I just want to pull up one chart before we get to our technical experts. It's the chart of the Nifty IT and what it did in trade yesterday in the dying moments of trade. So if you look at correlate the rupee and the Nifty IT, and it's a chart that we showed in the trade setup as well. If you just show that chart, you will see how big a buzz came about in Nifty IT stocks in the last half an hour of trade. Courtesy, I reckon, what happened to the currency. So big up move out there. Do watch out for the currency. Do watch out for the IT stocks in the session today as well, with one eye out on the rupee too. So this will be an important monitorable, and we will talk to Abhimanyu about these in moments from now. But it's time to get in our technical experts on board to talk about what to do in a scenario like this today. Aditya Agarwala, technical research analyst at Yes Securities, as well as Brijesh Singh, senior analyst at StockAxis. Gentlemen, both of you, good morning. Thanks so much for joining in. Slightly short of time, so I'll jump straight to the Nifty strategies. Aditya, for somebody who's wanting to trade the Nifty or the Nifty Bank today, is there a strategy that you have?
Yes, the trend is still bullish, though we have reached overbought levels on daily charts or on slightly shorter term time frame charts. But having said that, the price still suggests that we are still in an uptrend. We have had 950-point gains in a matter of 19 trading sessions. So that tells you that there's strong bull momentum right at the moment. You want to ride that momentum. You don't want to catch the falling knife or probably put your hand when the market's going through the roof. So I would continue to hold on to the long positions or build long positions. Around 11,530 is a very strong support for the Nifty. One can take a look at, if SGX is pointing towards a flattish opening, one can take a look at taking long positions around 11,530 for upside targets of 11,570, 11,600, and on the downside 11,490 should be a stop loss.
Okay. Brijesh, what is the index strategy that you are advocating today?
Good morning, Neeraj. See, no doubt, Nifty on a daily chart or even on the hourly chart has been trading on making a higher tops and higher bottom formation, which is giving a sign of a bullishness. Only the thing is that as we are heading towards the all-time high, if I'm not mistaken, 11,772 is the all-time high. So we are heading towards this level, near that level. We would be seeing, volatility as well as the chances are that swings, up and down would be on a major side. The plus point is that still the trend is being up. So we should play with the trend. The trend right now is pointing towards the north side, and the swing high and the swing low has not been broken. So that indicates the overall the positivity of or the strength of the chart for the bull side. Even right now the Nifty has been consolidating. It's not breaking the 11,400 mark. So what I'm been looking right now, as a Nifty neutral to the bullishness. One thing is that anyhow, if Nifty wants to play on a long side, taking a Nifty spot value, anything on if Nifty traded below 11,480, one can go for a buy side with the strict stop loss of 11,440 and play for the target of 11,590. And this target I'm looking within achieving within 2 to 4 trading sessions.
Okay, let's nail it down to specific stocks then, while both our experts seem reasonably bullish on what's happening on the index. Aditya, to you first, your ideas for the morning in addition to the Nifty and the Nifty Bank are Hindustan Unilever and Z Entertainment.
Exactly. So Hindustan Unilever, as you would have known, hasn't participated in the entire run that we've seen in the Nifty at all. And in trade yesterday, it made a double bottom and a bullish Arami pattern on the candlestick charts. That tells me that there is a temporary bottom in place for the stock and it's poised for an up move. I would take a long position at current levels of around 1700 for targets of 1775. We'll place a stop at 1670. The second idea is the Z Entertainment stock has been extremely volatile, and post that volatile sessions, it has now gone into a consolidation, a falling wedge pattern, so to say, and it's broken out from that falling wedge pattern in trade yesterday. I'm looking for a long trade out here for targets of 495. We'll place a stop at 445.
Okay. Brijesh, you have a couple of buy calls as well, not necessarily in the large cap space. Havells and PFC. Why these?
See, my first buy call would be a PFC on a daily chart. The stock has been trading with making the higher tops and higher bottom formation. So do the oscillator. Yesterday, we have seen a volume breakout, the average volume breakout above that. So this indicates the bullishness. Even the stock is trading near the 52-week high. If I'm not mistaken, it is 123 point something, 123.3 or 123.2, if I'm not mistaken. So it's been trading near that level. So one can look out to buy at the present rate of 120 with the strict stop loss of 116. Play for the target of 127 and above that. I'm looking this target achieving within 2 to 4 trading sessions. And same pattern of what PFC has been making, so do the Havells has been making. It's making the higher tops and higher bottom formation. Even if we take the daily chart, the stock is near the edge of breaking the higher Bollinger Band, the upper end of the Bollinger Band, so which indicates the bullishness for the stocks. So somewhere around 765, one can look out to buy Havells with the stop loss of 740, play for the target of 795. Even the target can be extended to the level of 810. I'm looking achieving this target within 2 to 4 trading sessions.
All right, Abhimanyu, just comment on some of these brokerages and like allied NBFCs, Edelweiss, GM Financial. looks like things have started to improve on ground for them. Edelweiss from levels of about 139, 140 has come back to levels of about 200. Is this space of any interest to you?
So, you know, what one is clearly seeing is overall, I think so one market is doing well, and as a result of that since a lot of these stocks had come down drastically over the last 7-8 months, you're seeing recovery in stock prices. Second thing is clearly some of these companies have very decent amount of asset reconstruction businesses, and with the SR deal likely to happen as of now, what it seems like being approved by NCLT, I think so companies like Edelweiss should get significant amount of cash flow from such deals, and probably that is a reason why you've seen now these stocks coming back.
But from a business standpoint, does it make investment sense?
So if you look at the business standpoint, I think so everything in terms of the liquidity issue which the sector was facing, 100% things are not resolved. There are still concerns, and we might see a period over next quarter or two where, you know, the growth rate may not be that high for this sector relative to what it used to be, say, last year till September. I think so what is essentially happening in the sector is that the ALM mismatches which some of the participants in the sector had, that needs to get corrected. So as a result of that, you could see a lower NIM for some of the companies. And for that reason, I think so, you know, one needs to have a view, look at, you know, what happens, especially on the asset quality side in next quarter or so, and then probably take a call at, you know, looking at it from a core portfolio perspective.
That is on Edelweiss. Let's take a look at Godrej Properties as well. The stock yesterday's session closed at around 752. The last 1 week has not been bad, and for the entire real estate pocket, actually, you've been seeing some steady gains coming in there. Aditya, would you trade Godrej Properties?
Oh yes, definitely. Yesterday's stock was up on very good volumes, so it has actually crossed its volumes of last 5 weeks, trading weeks. So that tells me that there is definite buying in the stock. After that 5% up move, I would be more than willing to get into the stock even at current levels and look for an upside target of 800, put a stop somewhere around 710.
Interesting. Abhimanyu, can I take that question to you? The two large global brokerages which have come out with their notes cite real estate as a space that they would be bullish on. If the REIT structure from embassy is any indication, some players would stand to benefit over the course of the next 2 years if they also come out with similar offerings. Are you turning tactically bullish here, or are you staying neutral? If you were neutral in the first place, of course.
So I won't be able to comment on the embassy REIT because we are one of the bankers to the same. With regard to the overall real estate industry, I think so, yes, going forward, one is clearly seeing that whatever has happened, DeMon, you know, GST, RERA, all these things have structurally led to, you know, the bigger players who are the organized market players doing pretty well. Commercial real estate anyways in an upswing move over last couple of years, and that will continue to do well. In case of residential also, you know, we are seeing these structural changes. For example, in case of DLF, they are talking about not doing these pre-launches and only selling after, you know, the entire building has been constructed, then only selling their products. In case of Godrej, we have seen that there could be significant value accretion happening from a recent deal that they've done in case of Pune. So overall, I think so things look pretty good for the sector. Clearly, from an asset allocation perspective as well, I think so since a lot of people, you know, shifted to equity, there will always be some movement back to real estate as well. That is what we feel. So I think so real estate as an asset class is an important asset class. Going forward, we do see that a lot of the pain which is there in the sector, it's likely to subside, especially for the larger players, because we clearly see them gaining market share over the smaller builders who will not have any ability now going forward to, you know, do this kind of a model typically, if you look at it, the model which they were operating was that, you get a landowner, and then you start with the construction of a project, and then you keep on prolonging it for 8-9 years, and then take benefit of the increase in property appreciation. Now the tables have turned. It is more a story of, who has a better execution, how fast you can give a project, and then, book those cash flows over a short duration of time rather than waiting for 8-9 years. So clearly, from that perspective, I think so people who have better balance sheet, they will benefit significantly. And for that reason, whether it is an Oberoi or whether it is a Godrej, both of these should do pretty well. And even I think so something like a DLF could also be a good stock to look at this particular juncture.
All right. DLF, in fact, the recent revision of price target there was about 220 or so, 222 or thereabouts. The stock, though, approaching 200 pretty quickly. Last 1 month up 19%. The pre-open session just a few seconds away, and no clear indications coming in from what the SGX is doing. A very muted start. The rest of Asia trades slightly more mixed with a slight negative bias. That's the SGX for you. We're going to watch out for how the currency also opens up after yesterday's big intraday weakness that came in. That's the Nifty for you. A lot of gyrations early morning, so keep a close eye out on that after a few minutes. 11,551 on the Nifty, and the Sensex is flat to marginally negative as well. Stocks then, Vedanta is up about 2.5%, JSW Steel is up about 2%, Asian Paints moves up 1.4%, India Bulls Housing that's up about 1% or so, Coal India, Bajaj Auto, no major moves coming in there on the gainers list. Amongst the losers, M&M loses out a bit, 1.5% lower. Yes Bank, that's down 1.5% too. Auto as a pocket is looking slightly more weak after yesterday's dismal performance. You've got carry forward of some of those losses. The currency, it's back above 69, so 69.10 is where the rupee is trading at. Some more weakness that's coming in. We'll see whether that has its bearing on the IT pack or no, like the way it probably did in yesterday's second half of trade. For the bond market yields, we stand at about 7.37. Actually, in a matter of 2 days, that's been a hefty gyration that's come in all the way from 7.30 till 7.37 in a matter of 2 or 3 trading sessions.
Interesting. And just a couple of names to mention before we move on to the top brokerage calls. Jet Airways would be in focus. Let's wait and watch what reactions come thereof. The first rates would be very volatile, but let's wait and watch what happens. It's been a bit of a downtrend the last couple of days. And ADAG looks like starting off okay. Reliance Communications in particular looks like starting off at least on a good note. Let's wait and watch if that happens. Move on to what the brokerages are saying. We've already highlighted what the call on Ultratech and Axis were. Sumit joins us with a couple of mid-cap names on which there is a bullish stance from brokerages. Morning, Sumit.
Good morning, Neeraj. So if you see in the big brokerage calls, firstly we have Motilal Oswal on Torrent Power. Now the brokerage has initiated coverage on this stock with a buy rating and a target price of around 315. Now according to the brokerage, strong positioning and healthy balance sheet of Torrent Power provides the company a strong base for growth. Now it also says that the volatility in the earnings would reduce going forward because the company has now adopted the accrual accounting in its distribution business. Now the brokerage is expecting the company's EBITDA and net profit to grow at a compounded annual growth rate of nearly 12% over FY19 to 21, and this growth rate would be supported on the back of the regulatory electricity and the franchisee-based distribution business of the company. Now, the second note that we have is on Minda Industries, where Nomura has initiated a buy rating on the stock with a target price of around 490. Now, according to the brokerage, affordable premiumization and regulatory push, which is making safety features mandatory for the cars, will drive a higher content per vehicle for Minda Industries. Now, on the back of this, the brokerage is expecting the company's revenue and net profit to grow at a CAGR of around 18% and 30% over FY19 to 21. Now, in this estimates, the brokerage has not factored in the company's recent acquisition of Harita Seatings, as the same is yet to complete, but it believes that this acquisition could add another 4% to the company's FY21 EPS. Lastly, it says that the stock is currently trading at an 18 times price to earnings, while the brokerage has given the stock a valuation of 25 times on the back of the healthy return ratios that the brokerage is expecting from Minda Industries.
Okay, Samit, thank you so very much for that. Those are those brokerage calls early in the morning. Abhimanyu, before we let you go, anything that you're really convinced about in terms of an investment which could last probably 6 months to a year?
So I think so, one should clearly look at stocks like SBI. I think so that could be an interesting stock to look at, as we had discussed earlier. I think so. Clearly, we are seeing a momentum in terms of, banks doing good relative to NBFCs. We are clearly seeing that the slippages are going to come down for the entire sector this particular year. And from a valuation perspective, the bank looks quite cheap at 1.1 price to book. So I think so SBI could be an interesting stock to look at from next 9 months perspective, considering the risk reward. Easily a 20% kind of upside is quite easily achievable in case of SBI over that period.
Okay, let's wait and watch what happens there. Abhimanyu, thanks so much for putting that into perspective. Interesting that a large brokerage believes that it's a large corporate-facing PSU bank which becomes a top draw. Speaking of SBI, of course, a very special conversation with the former chairman of State Bank of India, Arundhati Bhattacharya, at 9:30 a.m. today to talk all about banks, not just really what happens to PSUs. So that's something that you should tune in for sure. Let's get in one more voice on the show. Mukul Kochhar, co-head of equities at Investec, with us. Mukul, good having you. Thanks much for joining in. You reckon that flows will continue? What are your conversations with your set of global clients suggesting, and what does that do to the markets? What's the targets that you're giving your clients?
So flows, I guess, in India are dependent on two factors. One is the political economic stability, where we are scoring high at this point, given the fact there's some visibility at least emerging into what the next election result is going to be. However, it always remains a toss-up because it's difficult to predict. But in any case, there's better visibility now than two to 3 months before. India is also a reflexive economy where flows beget flows, because flows inherently bring in stability. The rupee stabilizes, we stop importing inflation. So it's reflexive in that manner, because flows themselves lead to improvement in the economic situation in the country. It also gives the country investment capital. So that part of the equation is sorted. The second important part of the flows equation is valuation. And that is where India is slightly aggressively positioned at this point. It's not like you don't have ideas to invest in India. If you look at the market, is very polarized. We have consumption stocks which are extremely expensive, and the rest of the pack is, I would say, fairly valued. So overall, while the market looks expensive, there's still investment opportunities in the country. So far the flows are looking good. If the market becomes more expensive, then the valuation part of the argument makes less sense, and you will see some tapering off. But at this point, I would probably be okay with flows. I mean, the second part, finally the third part, if you look at the global context as well, EMs are looking okay right now. After years of underperformance, EMs are getting flows from that. So from that perspective also, India should benefit.
Mukul, yesterday we had a Goldman Sachs putting out a target of about 12,500 on the index for this year. That would be roughly closer to about 18 odd times. So if you feel that the current valuations are a bit more stretched and a bit more expensive, would you believe that 12,500 on the index is a bit of a far reach and we may actually not get there?
I'm more in the cost of equity return world today, where you will be fairly when you say cost of equity return, that means you will be fairly compensated for being in equity, but not get into a massive or any bull run where you will be sort of excessively compensated. So and the reasoning for that is, as you said, valuations are high. They're high relative to history. They're high relative to 2014, which was another election where we got a reformist government in and the market re-rated. So I think re-rating potential is not much. And if you look at the non-cyclical portion of earnings, which is going to drive returns, that is roughly around 12-13%. Which is equal to cost of equity, and that is why the call for cost of equity returns. You'll be fairly compensated for being in equities, but not overly rewarded.
Watch out, 8 minutes have settled, and as they have settled the pre-open rates, it looks like we'll have a flattish start, maybe marginally in the green. Jet Airways seems to be the top draw on the losing side, 6% lower after the news flow. The Jubilant Life, where the Employees Welfare Trust is going to sell some stake, is also starting off slightly wobbly in trade, 3.5% or almost 4% for Jubilant Life too in the session. Just before we get to all that we need to know, Aditya, just very quickly, what within the large cap indices looks strong? 45-second answer. FMCG, does it look
yes, definitely. So I believe FMCG will chip in next, and you can see a good decent up move in the FMCG, Nifty FMCG. I'm looking at upside target of 31,000 out here on the FMCG. Top bets within the sector will be ITC and Hindustan Unilever, followed by Colgate Palmolive.
Okay, ITC did have a move yesterday.
Yes.
What's the target out here?
So one can take a fresh long even at current levels or on declines to levels of 296 for targets of 305 to 315.
Okay. Got that. We're just minutes away from market opening, and we tell you all that you need to know to stay ahead in trade today. SBI will work on an alternative plan for Jet Airways after talks with Etihad remain inconclusive. In the meantime, another 6 jet aircrafts have been grounded due to non-payment to lessors.
Mindtree board to consider buyback today. The company is over 970 crore rupees of cash equivalents and current investments on its books.
DLF's arm announces second joint venture with Heinz for a commercial project in Gurgaon. DLF will hold 67% stake in the joint venture. Nearly 2,000 crore rupees will be invested in the project.
Pollution Control Board orders Rallis India to shut down unit in Gujarat after fire breaks out during operations.
Aarti Drugs Board approves share buyback of 1.2% stake at 900 rupees per share. The buyback price is set at a premium of 39% yesterday's closing price.
Lastly, HSBC retains the buy rating on Hero MotoCorp but cuts target price to 3,500 from 4,000 due to likely volatility in the volumes. And actually, that's the key thing, right? What's happening to autos the last couple of trading sessions? Almost every notable auto name is coming off. There might be select pockets at the auto ancillary space which are doing okay, but autos by and large seem to be stuck between a rock and a hard place. Valuation is not that cheap, but the stocks have corrected quite a bit for people to believe that there could be substantial downsides from these levels as well.
Yeah, and the picture of belief doesn't seem to be changing anytime soon with regards to whether or not more and more companies start taking production cuts at their end because of the pile-up of inventories. But that's with the two-wheelers as well as the four-wheelers. Both of them have started to see some amount of production cuts. Aside from that, the other stock I wanted to actually talk about is an NMDC. The stock has done fairly well over the last few trading days, and international brokerages suggested the fact that because of what's been happening in Vale, prices of iron ore could actually even nudge $100, which could definitely, weigh in on an NMDC. So, what would you do with this one? The stock has already moved up the way it has, 26% in the last 1 month. Mukul, would you look at this particular pocket on the back of what's happening with iron ore prices and the possibility that there could be a further supply crunch which could harden prices further?
Yeah, so, NMDC, for similar reasons as you proposed, we do have a buy call on that. But these are really short-term calls. I mean, things change. As you yourself noticed, the current spurt is because of an accident with Vale. So, you don't know when supply normalizes, but right now, at least, the short-term call on the stock, on the stock and the iron ore, the derivative remains positive.
Brijesh, you want to come in on NMDC as a trade bet too? That's the fundamental view, but 21 straight days of gains is nothing to scoff at.
Very true. So it's not in the price from our calculation, so that is the reason why we're sort of we have a positive stance on it.
Sorry, no.
But
Mukul,
as you say, I mean, commodities per se, especially the metals pack. Sorry, go ahead.
No, Mukul, I didn't want you to comment on a price target, which is why the question was directed to Brijesh. I will come back to you on the commodity space. But Brijesh, Singh, very quickly, a price target on NMDC, 21 straight days of gains?
See, I was been looking this chart on a daily, somewhere around November 2018, stock made a high of 118, and after that we have seen a steep decline towards a level of 88 or 89, and after that a double bottom formation, and now the straight 21 day above that a rally has been seen. The rally has been seen upward with the increase in volume. So I'm not looking at anything the stock should be getting corrected. Anyhow, if the stock gets corrected, the base has been formed somewhere around 110 to 108 zone. Presently, if someone wants to go for a long side, then keeping a stop loss of 114, one can take a long side and play for the target of 121. The chances are that the stock can even touch a level of 124. So overall, the trend has been up. Play with the trend. Chances are that stock would try to touch a level of 124.
30 seconds left for market opening. Let's get into stop trading ideas from both our technical experts. Brijesh, I'll keep it with you.
I'll go with the PFC. As I have said, the chances are that we would be trying to make a new 52-week high, buy at around 120 with the strict stop loss of 116, play for the target of 127, 128. Time frame to hold this counter would be 2 to 4 trading session.
Okay, quickly. Aditya?
The FMCG pack, Hindustan Unilever for targets of 1775 with a stop at 1670, and ITC with a target of 305, 310 with a stop at 290.
Move in ITC yesterday, keep that at the back of your mind. Jaman, stay on. We'll just take in opening thoughts from you, but here's how the markets are starting off. In the green, yes, actually marginally. The Nifty Bank very, very flat. But remember, yesterday too, the markets were a factor, not necessarily only of the banks, but other indices too. But it's a flat start to the trading day today. In fact, the Nifty Bank now about 56 points in the red. The mid caps and the small caps, I reckon, should have a flat start too. Yeah, this is flattish, if not flat. Nifty small cap about 0.25%, but nothing too much otherwise. Let's get the heat map and see if IT stocks are moving up, because banks certainly don't seem to be. Selectively, IT is actually TCS, Tech Mahindra, Infosys, all three in the green. Hindalco and aluminum prices 3-month highs, so it's probably showing in on some of these aluminum players. I'll be interested in seeing what Nalco is doing too, but we'll come to that in a bit. Let's first stick to the Nifty. ITC about 0.25%, but aside of that, we don't see too many FMCG names really inching up. So it's led by IT. Infosys is the top gainer. Wipro, Tech Mahindra participating. TCS marginally in the green. So it's looking okay for the IT space. Banks and have they taken a bit of a backseat? No, not too much. We don't see too many banking losers, save for Kotak Bank, which is down about 0.5%. But all marketing companies pulled back a little bit, and it's in line with what's happening to the currency. Frankly, just perfect correlation the last few days. Currency appreciates, OMCs appreciate. Currency depreciated yesterday, OMCs are down. Z Entertainment 2.5% lower, and autos like M&M, Bajaj Auto, etc. continue to grind lower. So that pack is a constant. Just one difference from all the last few days, Reliance is in the red. The last few days, Reliance has been a strong gainer, with supporting the index. In today's session, marginally off. Nothing alarming really. Very quickly, 2 or 3 pockets that I want to highlight before I hand it over to Devi. Now, firstly, Jet Airways. It remains a stock in focus because of all that's happened. And how is it starting off? 5-6% lower or more? No, about 4.5% lower. But this remains firmly a stock in focus. What happens between the lenders and different parties? Also, what happens to the pricing at which the lenders buy stake, if they do, remains the key monitorable. Stocks which are trading at new highs in trade yesterday, a couple of new entrants, Fine Organics, Chalet Hotels, both of them well, marginally off in today's session too. Future Life, which is trading at new highs, just about flattish in trade. Lastly, brokerages, and they've come out with notes on a couple of stocks. Minda, big bump up. Nomura, target 42% higher. Torrent Power, Motilal Oswal, positive note, but not quite a reaction that we're seeing on the stock. Devina, what are you spotting?
Let's start off first with what Mindtree and L&T Infotech have started the trading day with. Yesterday's session was slightly more muted for both of these names, down about 1.5 to 2.5%. L&T Info flat, and Mindtree opens with gains of about 0.5%. The ADAC pocket was extremely active yesterday, and seems like today's session has got some gains within the pocket yet again. So Reliance Communications is up about 9%. Triple up at Reliance Capital, Reliance Infra, Reliance Naval, that's up about 5% Reliance Power, though, unchanged, but slightly more positive. Manpasand Beverages, yesterday's big mover, again higher in trade today, about 2.5%. Prestige Estates opens with gains, adding on to the weekly tally of 24%. Godrej Properties 2 is at 766. Remember, Aditya said that he's going to probably even buy the stock at the current market price. DLF 1.8% higher. That stock is doing well too. So within the real estate pocket, everything looks fine. X-side, Equities higher by about 0.5%. Petronet LNG moves up. Last 1 month for Petronet has not been bad. The stock's gained about 16%. Canfin Homes, it's up about almost 1%, not doing all that badly. BHEL 1.25%. Max India 1.2% higher. Jubilant Foodworks 1% gain coming in there for that counter. It's not bad on the advance decline ratio as well. About 660 stocks have advanced, 489 stocks that are looking weaker this morning. But you wait and watch as to what happens going forward from here.
Okay, just quick opening thoughts before we get back to a conversation with Mukul. Aditya, Nifty or any other stock that's looking interesting?
So Nifty, definitely I would take along around 11,500, dip towards 11,500 will be a decent place to take fresh long positions for target 11,570. And as far as stock is concerned, stick my neck out with the FMCG packs yet.
Okay. Brijesh, quick thoughts, anything that stands out for you as a trade?
See, as a index has been confirmed, if any dips come, then risk reward ratio would be in your favor for the Nifty 11,480. If it comes, then one can go for the buy side with the stop loss of 11,440. Play for the target 11,590. Infosys is looking good on the chart right now at 728, or any dip below somewhere around 725. It comes, one can take a buy call with the stop loss of 715. Play for the target of 745 and above that.
Okay. Gentlemen, we leave it at that. Thank you so very much, Aditya, as well as Brijesh, for joining us this morning with your thoughts. Mukul, come back to you within the pharma pack. If you've been monitoring Lupin and the issues that it's currently facing with the US FDA, obviously there is going to be an impact on its EPS. You are going to see, because of this particular US FDA issue, the sales of about 13 to 14% which goes to the US could be impacted. So how would you read into probably lightening the positions in Lupin if one has one?
Yeah. So Lupin is one of our core sell in pharmas. It's not just this plant. I think in all 6 plants, if I'm not mistaken, are in some form of warning or observation at this point, which means that I think maybe, if I'm not wrong, roughly 40 to 50% of their overall sales are under a cloud right now. So, this does create an issue with the stock in a big part, because a lot of the, valuation currently is based on a recovery of earnings. And, with more and more plants coming under a cloud, that recovery of earnings becomes an issue. Just remember that I think the current earnings probably are roughly worth $20 on an 800 rupee stock. So the earning acceleration was pretty much in the price before all these events started to come in place. So the stock is one of our core sells in the pharma space, Lupin.
Wow.
Anything else that you feel one should be cautious on? While obviously you're seeing liquidity driving most quarters and most sections of the market, any particular pocket that looks a bit more dicey for investment at this point?
See, risk is inherently comes from valuation. So high valuations, high expectation built into stocks, that's where the risk is. And, I'm not too comfortable with some of the consumptions. While this is a big theme we've played over the years, at this point, I'm not too comfortable with valuation being ascribed to some of the discretionary consumption names. FMCG is something we've been cautious on for a while. We continue to remain cautious on that. And, part of the reason why this year caution is also warranted is because margin expansion has come through for many years, in fact, and it has just started cracking. Last quarter was the first quarter where margins of companies, if you saw, started taking a dip. The comps of a lot of these companies will start getting a little aggressive as you go, because last 4 or 5 quarters for FMCG companies have been extremely solid in terms of volume growth as well, and those comps start coming off. So volume growth plus margin expansion has resulted in very fast EPS growth, which has coincided with multiple expansion. So we're coming off a very good phase for some of these consumption stocks, and that's where I'm a little cautious right now, where if earnings growth falters, volume growth just based on last year comps start trending a little weaker, that means your multiples are also at risk. So this is where I think the big risk in the market is today.
And as a follow-up on that, Mukul, would be whether the damage to the multiples that has happened in the auto space might extend itself, or is this about the levels at which the stocks could consolidate for a while, even if they don't move up? The numbers, though, aren't looking all the best.
Yeah, autos, it's a good question, I mean, so, once again, valuation is everything. You have to keep that in perspective of your stock calls. So, I think some of the two-wheeler names are cheap today. One can be a little more constructive there. Maruti is in sort of a gray zone. We rode this stock for many years. But at this point, we've taken our foot off the pedal. It is for the valuation is not that low, and this kind of a shock where volume growth just collapses, that sort of environment was just not priced into the stock. So some of these higher, more expensive stocks, I'll probably just sit back. But something like a Bajaj Auto where not much is priced in, I'm probably okay. So it's a little more nuanced over there, based on the valuation that you're getting an entry into the stocks.
Okay. A couple of pockets in news. I just first want to mark a Nalco and see what Nalco is doing in the session today. Hindalco, remember, started off well. Aluminum prices are at highs, 3-month highs, and that's showing in the way the aluminum stocks are doing. So that is one. Two, the aviation companies. While Jet's woes continue, and Jet is down about 4.5%, it's showing in the price. What's happening to Interglobe Aviation and SpiceJet? That's the other question, right? Would Jet's loss be the gain for these two players, both from a business perspective and also the talk about how maybe the planes go to some of these fleets as well, the ones which are hungry for planes as well. Mukul, how do you look at aviation now? I mean, now it's two strong players versus an erstwhile weak player from the government side and a private player which is also becoming very weak. Is it SpiceJet's and Indigo's game to lose, and therefore would you bet on them?
Yeah. So unfortunately, we don't cover the sector, so I can't give you too many insights out here, especially because we're not tracking earnings and where they're going. But yeah, I mean, looking from outside in, the structure is getting more attractive. So one would be looking at investment opportunities in this space. Unfortunately, we've not done too much deep work out here for me to comment.
Okay. While you've already spoken about autos, the fact that the other discretionary pocket, the consumer discretionary pockets, have not witnessed the kind of slump that autos have. So you've got your paint companies and the other pockets which are related to, to the discretionary spend. Does that probably, talk a little bit more about pressures in terms of financing and funding that are the key causes for the pressures within the auto pocket, and not just the fact that the demand has been a little bit of a slump?
Yeah, that's actually honestly a very good question, and key to where we are headed. One of the big concerns in the market today is the high level of retail lending that has taken place over the last 3-4 years. But it's important to keep a few things in perspective. One is, if you look at a percentage of retail to GDP, we are probably back to what we were in 2008, 2009, just before the credit card crisis. So it's not like we are hitting new peaks in terms of retail lending. That's point number one. Point number two is, if you compare India to other emerging markets, our retail credit penetration is still low. So it's one of the lowest in the world today. Even if you adjust for the interest rates in India, and that's where you get one of the pushbacks, that interest rates in India are high. So even a low credit penetration in India means a high burden for the borrowers. In fact, if you look at the lending rates in India versus other emerging markets, we are not that high. Honestly, we're in line. Russian lending rates are higher. A lot of other emerging market lending rates are actually higher than the lending rates in India. So even from that perspective, as in burden on borrowers, we score well. There is some, one has to be a little sort of, cautious about the speed at which retail lending has grown. But I'm not too worried at this point about the penetration or the borrower's abilities to service the loan. So you'll probably get a small hiccup, but, longer term trend of higher financialization of the economy, more retail lending should continue. So I think, while that is a concern, I will leave that aside. I think that will continue, maybe minor hiccups here or there. What does concern me is the valuation that some of these stocks have attained at this point, where you're not leaving any margin of safety. So, you can, as I mentioned, even in retail lending, you can get a bump here or there. If you're growing fast, there can be a bump even in the long-term structural story. But some of these, AC stocks, we've been very, very bullish on, but the valuations are much higher than when we entered. That makes us cautious. Paint stock, very good structural story in the country, but when you enter at those valuations, once again, you're taking inordinate risk. So this is where I was actually referring to. Consumer discretionary, very, very bullish in the long run. We've pushed these stocks for the last 3, 4, 5 years. But at this point, given the valuations, I am stepping back and thinking whether it's probably wise to wait for a better entry point just based on price.
Okay, fair call. Mukul, great having you as always. Thanks much for taking the time out and being with us. We slip into a quick break on the note that the markets are very flat, but on the other side of the break, a very special conversation with former SBI chairperson and a banking industry expert, Arundhati Bhattacharya. Stay tuned.